All right, well, let's get straight to our first corporate on the show, GIC RE. That's the stock in focus. Starting January, reinsurance treaties as well as rates will be revised for India business. Which are the segments which are expected to see this revision in rates and by how much? Also, what's the likely impact on business? Well, we have with us Mr. Ramaswamy Narayanan, who's the chairman and managing director of the company, who joins us on the show. Well, sir, good morning. First of all, Happy New Year to you, your family, as well as your entire team. Run us through this quick aspect, with regard to this, reinsurance treaties as well as rates getting revised upwards. How much will it be for which segments? And if you could tell us the impact on the financials of your company.
Yeah, thanks, Nigel, and wish you and your team as well as all your viewers a very happy new year. So on the reinsurance side, there are two things that are happening. One, of course, is the international business is really the changes happened. The renewals have taken place on 1st of Jan, but there the prices have kind of remained soft because the loss ratios have been better out there. But when it comes to India, so just a bit of a clarification here. So the Indian renewals really happen on 1st of April. And what change that you were talking about is basically on the direct side. If you had seen from 1st of April this year, from 1st of April 2024, for the last 9 months, the property business, the rates they went through a lot of changes. They really went down because people were trying to ramp up their market shares at very difficult and unsustainable pricing. But I think going forward from 1st of Jan, we expect this pricing to stabilize, this prices to go up on the property front, because currently the pricing that has been done by the industry was not really sustainable. So I think these prices will go up on the property front, and the changes on our financials, I think our financials will look good. The way we are seeing it, our combines should improve this year compared to last year. So last year we ended with about 112% of combined across both domestic and international. I think this year the combined will come down to 110%.
Mr. Narayanan, good morning. Thank you for joining in. Wishing you a very happy 2025. And since you mentioned financials, sir, I'd like to ask you a two-part question. For FY25, you had mentioned a couple of things. First, that you wanted to have a top-line growth of 10% for the full financial year and a net earned premium growth of around 5 to 6%. For the first half, your top-line growth has only been 1% and net earned premium has grown by 2%. Now, do you expect H2 to be that good for you to cover the remaining ground and achieve what you have guided for? And what do you expect in the second half going forward?
Yes, I would say so. So if you see, we ended last year with about 37,000 crores of premium, gross premium, and we had said 10%. So we expect to be writing about 41,000 crores of total premium this year. Till H1, that is till September, we did about 20,800 crores of premium. So we are well on target of reaching 41,000. Same with earned premium. So I think from a business perspective, yes, we are very confident of doing a 10% growth compared to last year, and that will reflect well on our bottom line as well.
Okay, all right. So we got that. You're maintaining your guidance. You believe that you'll stick to what you have set out, despite of having a little bit softest second quarter and the first half of the year. We take that on board. Your underwriting losses, they have come down, and your operating profit as well is up. Could this pace of improvement with regard to both your underwriting losses as well as your operating profit continue? And could you give us a number with regard to underwriting losses? What does it come down to?
So, last year we finished with about 4,000 crores of underwriting losses. Yes. We expect that to come down to about 3,000 crores this year. And that is based on, the kind of losses that we've been seeing in the market. We are, of course, monitoring it closely, but we believe total underwriting losses should come down to about 3,000 crores. Now, on the investment side, we're still seeing how things would change because on the fixed income side, of course, our investment income has gone up. But one important piece of our total investment income is the profit that we gain from trading or the selling of stocks. We have not done as much as we wanted to or as much as we normally do every year, simply because markets have been down in the last few months. We will see how the markets change in the next 3 months to decide how much of profits we will book on that side. So that will really, depend on the market changing for the better. And based on that, our profit figures could change. At this point, we are maintaining that our overall profits will remain at last year's figures, simply because our investment income could come down because of the sale of, profit on sale of equity.
Okay, just to reiterate that point, the underwriting losses come down to 3,000 crores from 4,000
Yes.
crores. And last year, operating profit was around 4,100 crores. So for this year, it stays in that vicinity. Does it go up? If yes, by how much?
No, it will stay around that. It will stay around that. Yes, yes. And the overall PBT and PAT will remain at the same levels as last year.
Got it.
Now, Mr. Narayanan, since you mentioned in your previous answer that the markets were down and that resulted in some fluctuations, was that the reason as well that some of your segments also saw negative growth in the second quarter? And do you expect that kind of pain to continue in the remaining 2 quarters as well?
No, not in the business. I think business is doing fine. I think it was only property which was, where the pricing really went down, because insurance companies on the direct side were trying to ramp up their market share. But I think we've had a good amount of discussions with them, trying to guide them on the pricing. And most companies have seen that the pricing that they have been doing is really not sustainable. So going forward from 1st of Jan, we expect those pricings to stabilize. Otherwise, our growth in the business will continue at whatever levels we had indicated earlier. The only reason for profits not going up in spite of losses, underwriting losses coming down, is because, like I said, we have not really booked too much of profits on sale of equity. We are waiting for the right space, in the market before we do that. So depending on how those things change in the next 3 months, our investment income could go up. If that happens, the profits could go up. Otherwise, it will stay at last year's levels.
All right, Mr. Narayan, final question before we let you go. The government of India, well, they paid off some stake, 3.5% in September earlier this year. The holding has come down to around 82%. You're sounding very optimistic about business, which could be a good time for them to go ahead and reduce stake further. Have you heard from them? By when do you need that stake to come down to 75%? You could give us a timeline. And should we expect something in 2025 with regard to the government pulling down their stake further?
It could happen. Initially, when we thought, in that juncture, when the government brought down the share, we would actually come down to about 75% levels. But they decided not to do the entire dilution at one stage. So now, yes, it could. I mean, if you've seen, our prices have gone up. The price of GIC has gone up in the last month or so. And the stock looks good. The performance looks good. The way we see it in the short to medium term, this company should do very well, because the business is really doing well. So with all that, the government could take a call to reduce it to 75. I don't think they have any dates in mind. They've not told us anything on that. But yes, it could happen in 2025.
All right, Mr. Narayanan, thank you so much for sparing time and joining us today. Wish you a very happy 2025 and good luck for the rest of the financial year as well. That was the management of GIC RE, also saying that this government stake sale for the remainder stake may happen in 2025, but no timeline just yet.